Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another trading day, retail trading team. I'm Mastro, and this is your routine briefing. So we're going to jump right into the charts, as we always do, and see what we got going on here today. Maybe. Okay, there we go. Alright, so starting off the day really in the middle of nowhere. So just want to draw your attention to that white dotted line that you see in the center of your screen on the left chart here. That is the POC coming from the 4-hour chart. So really kind of in the middle of nowhere to start the day here, and you're really seeing that with a lack of volume. Adjusting my mic here. Okay, very good. So yeah, so that's what we got going on. My charts appear not to be moving, so let me open my adjacent chart here. Okay, we're good. So that should refresh momentarily. I'm not really sure what's going on. Let me connect to data. Sometimes my other chart takes the precedent. Yep, that's what's going on. So we'll disconnect that. Reconnect this. And there we go. So the candles start updating, but again, we're just really consolidating around this POC from the 4-hour chart. So really not much to do to start off the day here quite yet. So the first really immediate support is right around where you're seeing. That's what the POC does. And I would expect a lot of choppy action before we resolve one way or another. Good morning, Mr. Ernie. Nice to see you in the chat here. Good sir. So yeah, so that's what we got going on. Started the day not too busy, which is fine. We've had a couple nice and easy days, so we have until, at least I have until 11 a.m. to get that trade, and so just for now, just kind of watching and waiting for those key levels. And what are those key levels? Well, today, if you want to go check them out, you can find it, the link to that warm-up document in the description of this video. That is where I keep these SPY levels, and I have started a new little policy today. I'm bolding the ones that are most important. I know, very innovative, bolding the ones that are most important. So yeah, I figured I'd adopt that policy there. So just kind of talking about our major points. Really, for me, it comes down to this, starting with this SPY 448 level. Really, 448 to 448.50 is where I'm identifying pivot or balance. Where is that on this chart? That's right about where that cyan line is down here, right about that 45.30-ish area. That green dotted line, by the way, is just the bottom of value. Red dotted line is the top, so you can see we have a really tight value area. So let's look at that in the 4-hour chart, since we're not in any rush, it seems. And yeah, you can see right there, nice tight range, that D-shaped profile. So if you want to check out what those profiles mean, I highly recommend going to, I think I have it in my routine trading folder. Let me just check. Yes, so if you go to that routine trading folder, also link to the description of this video, and you check out warm-up TPO, you can see what a lot of these TPO shapes mean. So as Ernie is long here, maybe we should all just buy every contract in the world right now, because Ernie's track record is, as they say, impeccable. But as from the beginning of this video, just kind of watching what's going on around this POC. So we can wish Ernie luck as we wait and we watch and we see. So I think a big development from yesterday. So yesterday was really interesting. It was a really nice example of fake breaks relative to trend lines. They don't just have to be horizontals. And you saw it yesterday. We popped outside this triangle, and then we had that outside bar back in, and then we just kind of rallied, drifted up all of the entire rest of the day. So that was a really nice move there. Today, as you can see, we're kind of on the outside of it, retesting the top of value here. So I don't like to hang out too much on the 4-hour chart. That is kind of the big structural charts where I draw the levels and stuff. But I just wanted to show you what I was looking at on that profile there. So if we go back to that structure chart, you can see what I mean there. So again, just kind of hanging out. I don't have anything much going on quite yet, and because I'm watching really two areas for my engagement today. The first being if we do get a rally here, pay Mr. Ernie, go back and visit that prior day high. I do like a fake break there, so that level is about 452 on the SPY. So that would be the short side. That's right near the edge of the expected move to the top side as well. And then again, just to reiterate, because I got a little off track here, that 448 to 448.50 is balance. I'm looking for that reclaim trade if we test and reclaim it. And again, that's the edge of the expected move to the other side. So those are the two primary scenarios that I'm looking at. Third scenario will be if we do pop this cyan level and we start to sell off below. I do like that as a breakout trade in two parts. So watching that acceptance below that 447 area. Really, I think you could even argue 448. You start to see some acceptance below that. You get that potential breakout trade. And then once we get below that 445, we pop into this gap here. So looking at the SPY daily chart, we pop into this little value gap here. I don't know if that's what it's called. That's what I'm calling it. You pop into this gap here, and I think we're looking for a retest of that 443 level at the very least. So 448, probably the most important level on the board today, at least for that support. And once we start to get below that, I think we can start to look for a potential breakout trade to the downside there. Yet again, I have to keep reiterating a couple things. First, a little friend volatility here until we're above that 1620, really 1610. So we start to build some time and volume outside this triangle, above that red, we'll call it support, we'll call that resistance level. Until we're starting to build some time and volume above that, we're not seeing any signs of real fear. So the short trades continue to be lower probability relative to any long opportunities there. So that is what I'm looking at in the daily and in the VIX chart /VX chart. Let me hide this. And the other chart I just want to bring to your attention is what's going on the weekly chart here, and it kind of gives us, I think, the most important of perspectives for a few reasons. So yellow horizontals are just the 3-week swings. I like to keep those. I like to do 3-day swings and 3-week swings. Those are some of my most important horizontals. So that's what those represent there. Just to tell you what those are real quick. The 3-week swing which is just the high and the low from the past 3 weeks. Low is 437, high is 452. Obviously on the 3-day, that 452 is also the high, and so that 448.50 is the low. So that's why that 448 level is so important. There's a lot of stuff going on there. But remember, SPY is above all major trend lines. You can see them here. It's dotted one, this one from the October 13th low, and we are outside of value there in a state of imbalance. What happens when you're above all major trend lines and above value? Well, the bulls are in complete control. So really simple. Again, I think we are at the point where these short fade trades, especially at the fake breaks of, say, the prior day high today or that breakout below, I think those are reasonable trades. Yet keep in mind, there is no question the bulls are in complete control, and it is likely that dips will be bought. So definitely stay nimble on the short side if that is the side that suits you for today. So that's what we got going on. You got the gaps, you got the trend lines, you got the imbalance, and you've got all your major levels. I'm going to package this up, throw it in the newsletter, and get that in your inbox right away. And until then, you can also get the other cool resources in the description of this video. I think I've said that 4 times, so why not make it a 5th? And yeah, that's where you can find all the cool stuff, including my day trading strategy, which I dare say is pretty close to finish on that future side. So check it out if you're so interested in that. So let's go back to our structure chart. Ernie says he's just booked his 5 handles. Let's make sure we're not already at the prior day high there. Oh, not quite, but definitely making nice moves to start the day here. This is a very interesting looking candle. So this is what I call continuation candle 5-6. So if you want to, we'll see obviously if it continues here, but you might want to check that out. It's also in that routine day trading folder. All right, thank you, Ernie. Enjoy your workday. Congratulations on your 5 handles, and I will talk to you soon, good sir. And yeah, that goes for everybody else. Let's get trade in. I'm going to go move to Twitch, get some music going here. Come hang out if you're so interested in those rough transitions that I am always willing to provide to my dear listeners there. And please give this video a like. That thumbs up does help with the YouTube algorithm. And I appreciate any engagement here or on Twitter, where you can find me at Routine Trader. So regardless, I thank you for your attention and hope you stay classy until tomorrow.